Hey, good morning. This is Jerry with Wealth DynamX coming to you live with a real quick thought. Just finished my chest and tricep workout, killer workout, and I wanted to come to you with a thought today, something I think you need to know about, be thinking about, and planning ahead for. And really it's this, all right? So people put most of their money either in banks and retirement plans, and when it comes to retirement plans, you've got your 401k, but most people like Roth accounts. And a Roth account is an account where you put the money in as a net contribution, meaning you've already paid income tax on your money. It goes into the account, you invest it, and all of that money grows tax-free, right? And then when you're 59 and a half, you can pull that money out and pay absolutely no taxes on it. Now that sounds great, but there's a couple things you need to think about. Okay, all you hear about is the benefit. The benefit is tax-free growth, tax-free withdrawals. That sounds great. You don't like taxes, I don't either. And so you do the Roth IRA, right? And it's the thing that Dave Ramsey talks about, and it's the thing your financial advisor talks about, and it's the thing that wise older person in your life talks about. And so you do it. You start putting money into it, and you're like, all right, this is dope. I'm gonna put it in this fund. It's gonna grow 12%, just like everyone said. I'm gonna pull that money out tax-free at retirement. Except, what if by the time you retire, it's no longer tax-free? Now you're hearing this and you're like, whoa, Jerry, that's impossible. It's a Roth IRA, it's always tax-free. That's what it says. Yes, I know, but think this through. Who invented the Roth IRA? The IRS, all right? What is the primary duty of the IRS? To steal from you. They are the collection agency for the Federal Reserve, or for the US Treasury to pay the Federal Reserve off. They're gonna steal from your income. All right, so think this through logically. If I was a thief and I had control to take your money, would I really give you an account that I could never touch? No, I wouldn't just give you an account I could never touch. Now, that doesn't mean the Roth isn't tax-free, but what I'm saying is the Roth IRA has only been around since 1997. We're all betting on it like it's this age-old thing. It's probably as old as your adult son. Okay? So, just like your adult son, if it's 21, 22, 23 years old, that kid might change his mind a couple times. Man, I'm gonna go to college. Oh, I don't think I'm going to anymore. This is my career path. Oh, never mind. I think it's this. Why? Because it doesn't have enough experience to know what it's actually like yet. It's got to pick and find out what works best. Same thing with the Roth. So nobody actually knows if the Roth is going to remain tax-free. In fact, since 2013, Congress has been discussing taking away the tax-free benefit on the Roth IRA. Why? Because we're having a budget problem. Okay, if there is trillions of dollars of tax-free money sitting in Roths all across America, and all Congress has to do is say, hey, we're gonna make this a traditional IRA. Sorry about that. We'll give you a tax credit this year, just like they gave us the stimulus money. And you're like, oh, cool, I just got a free $5,000. But by the way, now we're gonna tax the account once you take money out. That's a very real scenario. That is a very real scenario. Okay, it's been talked about in Congress, like I said, since 2013. For those of you that don't think that would happen, let's use the traditional IRA, for example. Traditional IRA came out, I think, in 1974. Okay, and the traditional IRA, you put in money pre-tax, you deduct it, the money grows tax deferred. It was put into place in 1974. Did you know that in the late 70s, I believe it was 1978, just 4 years after it was started, Congress reneged on it? Okay, Congress said, oh no, we're taking this thing away. They got rid of the account in 4 years worth of time. It was something that over that 4 years, Americans were probably like, man, this is great. I'm gonna do this forever. This is always going to be good. This is the plan, right? And then 4 years later, Congress changed their mind. What's to stop them from changing their mind on the Roth IRA? Why did they change their mind? Because they were losing tax money on the deductions. That's the only reason they changed their mind on the traditional. So if they're losing money on the deductions, how much more money do you think they're losing by allowing you to keep a Roth IRA that's 100% tax-free growth? And if it got bad enough, what makes you think they wouldn't try and access that money? Did you know also IRAs are not protected against nationalization? Nationalization means the government takes over all of the IRAs because they're technically government sponsored. They're part of the Internal Revenue Code, where the government takes over all of the IRAs and turns it into a big socialist fund. That's also been discussed. So when you put your money into an IRA, realize you are not putting it into a safe account. You're putting it in the hands of the IRS. You're putting it in the hands of the government. They make the rules. They can change the rules at any point. They can decide the account's no longer tax-free. They can decide they want to nationalize the plan. They can decide that there's no longer an individual IRA and everyone has to do the My IRA that Obama came out with in 2009 or 2010. They could do any one of those things, and guess what? You would have no say in the matter. Doesn't matter that it's your account. It doesn't matter that it's your money. You put it in a vehicle that they created. They have control. All right, so I want you to consider that. A lot of us just naively think, oh, this thing is always going to be around forever. I'm going to put every cent that I own into it, and it's the thing that I should do always and forever, and I'm never going to change. Guess what? Your parents probably thought that about pensions. They were like, hey, if I work here for 40 years, I'm always going to have this. This is always going to be here. I'm going to be financially independent. And guess what? In the 70s and 80s, they found out company's not going to pay my pension anymore. If that could happen with a pension, how much easier could that happen with a piddly little $6,000 a year account? Super easy. So guys, I want to share with you, if you're trying to contribute money for retirement, you're doing the right thing. But my philosophy is you shouldn't save money with people that don't have your best interest in mind. The IRS does not have your best interest in mind. Again, their job is to steal from you. So when they create an account and they say, hey, put money in here, it's probably not a good idea. It's a lot like putting cheese on a mousetrap and saying, hey, come get some cheese. Like, yeah, there's cheese, but, probably going to kill you if you go get it. Same thing with these retirement accounts. So if you're watching this right now and you're like, man, I've never thought of this, or you're like, I have heard of this, I never knew if it was real, and I never really knew what to do about it, I want to make you an offer really quick today. So I have a program called the Sacred Account. Okay, the Sacred Account, it's got the benefits of the Roth IRA where it grows tax-free. The difference is it's called a unilateral contract, meaning there's only one party to the contract. That one party is you. And what that means is that the IRS has no control over it. The federal government has no control over it. Okay, creditors have no control over it. Banks have no control over it. Wall Street has no control over it. Heck, the insurance companies that we set it up with don't even have control over it. You are the only controlling party, which means nobody can change the game on you. Nobody can tax the account when you were told it wouldn't be. Like, you're stable and secure with how you've established the account, because you're the only one that has the rights to change anything. If you would like to learn more about that account, it's more secure. It's been around for over 170 years. It's something that is consistent. It's been producing 6 to 8% gross annual dividends for over a century and a half now. So if you're interested in learning more about that account, I want you to click on the link. It's called sacredaccount.com. And there's a lot of free information. You don't have to buy anything. Just click on the link, look at the information. If you would like to learn more, you can submit your information. If you're watching this and you're a current client of mine, you should be on the Sacred Account. It's a smart move. We talk about the 40% rule all the time. This is where that money goes. Reach out to me if that's the case. Thank you for watching. Again, this has been Jerry with Wealth Dynamics. Make sure you like, share, and subscribe. I will talk to you soon.